Peter Schiff, CEO at the Euro Pacific Capital. He joins us live out of Connecticut. Still with us on the desk here at the SGX, our chart man, Daryl Guppy from GuppyTraders.com. Peter, good to see you again. Appreciate your time. As always, you were listening to Treasury Secretary Geithner talking to Steve Leisman. And one of your ideas is, look, going over that fiscal cliff, that's got to be part of the solution. Explain.
Well, first of all, he's talking about higher marginal tax rates on the rich. That's not going to solve the problem. If the president wants to at least begin to solve the problem with taxes, he needs to tax everybody, not just the rich. But of course, the best way to go about it would be to slash government spending. But there is no real cuts in government spending. And if we avoid this fiscal cliff simply because we raised marginal taxes on the rich, we're going to go over a much bigger fiscal cliff eventually. And I'm not talking about that many years down the line, because this is part of the solution. The fiscal cliff means we start to pay for our bills. Avoiding the fiscal cliff just means we pile on more debt so we don't have to pay our bills today, but then the bills pile up and we have an even bigger fiscal cliff in the future.
Okay, Peter, we've got Geithner. He just said that they will let the economy go over the cliff if the Republicans do not agree on tax increases for the wealthy. Is the Republican Party playing a dangerous game here? I mean, after all, Obama was just handed another mandate on the economy, on the promise of tax increases for the wealthy. He was very clear about that. And there's an election just around the corner in 2014, and the Republicans, do you think they could really pay a heavy price for this if they don't play ball right now and cut a deal?
Well, there's no question that the majority gave the president a mandate to steal from the rich and redistribute the loot to the people who voted for him. But the president should have the integrity to reject such a mandate. That's the problem with democracy, when you have people voting to steal money from other people. But even if the president is able to deliver the stolen goods, it's not going to help the economy. We're actually going to be in worse shape if we avoid this fiscal cliff, because then, you know, the dollar might go over a cliff of its own. You know, if we avoid the cliff and we do what the president wants, which is make it easier for the president to unilaterally raise the debt ceiling so that there is no ceiling, the sky's the limit on American debt, maybe people around the world, particularly people over there in Singapore and in your part of the world, will start to realize that nobody lends America money. They give us money, because we can't pay any of it back. And this whole thing is a giant global Ponzi scheme, and maybe the world will figure it out.
Peter, you've said this before, that the US needs to go over the cliff. There needs to be something that really focuses the minds, breaks the impasse and hits the reset button. That is going to damage market sentiment, though. How low could the S&P 500 go if that happens, if that does transpire?
Well, first of all, if we don't go over the cliff, then we keep borrowing over $1 trillion a year. That's doing more damage to the economy. That's doing more long-term damage to the markets than addressing the fiscal imbalances. The problem is nobody wants to talk about really cutting government spending, because that's the real way to solve the problem, and that's real economic stimulus. If we can shrink the drag that the government places on the economy, government spending isn't stimulative, it's a sedative. The economy can't grow because the government needs to get out of the way. The government has to reduce the drain that it places on the productive segment of the economy. So we need real cuts in government spending. Everybody who's getting a check from the government right now needs to get a smaller check. And some people need to get no check at all. But nobody wants to talk about that because everybody is afraid, as you said, of the next election where somebody who gets a smaller check ends up not voting for the person who cut their benefits. But we need people in Washington to be statesmen, to do what's good for the country, not what gets them reelected. Because unfortunately, what's good politics is lousy economics, and we're going to do a lot more damage. Because what's going to happen is the dollar is going to plunge eventually, and interest rates are going to go up, and then we're going to be in the same situation as Greece. And what are we going to do?
Peter, unfortunately, we're out of time. We'd love to continue with this. Peter Schiff, CEO of Euro Pacific Capital, joining us there.